Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. Think of it as a reduction in inventory, like a decrease in inventory for goods. Price-wise, I don't think the market can always price in or not price in that. I think there's only one natural seller in the market, and that's the person who makes the goods. That's the miner. They have an advantage over other goods. The cost of making the item is there, and to cover the costs of making it, they sell the end product. And if that's going to be cut in half, the cushion and natural sales are also cut in half. Jack Mears, CEO of Strike, thinks that Bitcoin could hit $1 million per coin when the government makes more money. The KA and printing Mears thinks there will be a crisis in the bond market that will require the Fed to step in and save the banks. Jack says that the bond market is important for all government central banks, but especially for the US government, which has a lot of debt and needs bonds to pay its bills. Because these promises are too big for the government to keep, it takes money from future generations to fix things which are often wrong. In a recent talk with David Lin, Jack said that future KAE rounds might be 3 times bigger than the ones that were used during the pandemic. It was on Nasdaq.com. It cost about $13 trillion to print all of that money in the middle of 2021, and COVID costs were $5.2 trillion. More than the $4.7 trillion spent on World War II, the $4.5 trillion spent on quantitative easing, and the $3 trillion spent on building up infrastructure cost more than the personal aid, checks, immunizations, unemployment, and other goals. Jack thinks that the Fed and other central banks will add more money to the world economy. Jack proudly said earlier this year that he was all in on Bitcoin and would dump the US dollar and other fiat currencies. He said this because the prices of assets will go through the roof and the prices of fiat currencies will go through the floor. The latter has lost more than 90% of its value in the last 100 years, but Bitcoin's value has grown by thousands of times and is still the best performing asset in the world since it was created. We're going to play Jack's helpful chat with Bitcoin Bubble. For like this, please watch, share, like, subscribe, and turn on post notifications. That question has 2 parts to it. I've been a long term. As a Bitcoin owner, I believe that the price of Bitcoin has been going up for 15 years. The highs and lows have always been higher, and I think more people are starting to understand that if one currency's supply stays the same and another currency's supply is quickly inflated, then the fixed supply currency will gain value against the inflated currency. That's why I think Bitcoin will go up against the dollar, and more people agree with me. That's why it doesn't surprise me that Bitcoin is still the best performing stock this year. I think the story we're living is my favorite metric right now. It's world debt to GDP. I like to think about that in terms of how much our governments have borrowed from our future and how much growth they're making to pay that back. Therefore, we have taken a huge amount of time and energy from our future, like money, and we can't pay it back. This loss needs to be recognized somewhere. This is making the market more aware of the fact that governments and central banks around the world are trying to make up for that loss by making the currency less valuable. That can be seen all the way down in New York City, where inflation rates are low. So if that's true, there's a race to own hard assets, and Bitcoin is the hardest, most advanced money we've ever seen. That's why I think a big part of the recent rally in Wall Street's acceptance of an ETF is that they're going to make the loss of global debt to GDP and all the deficits look like a good thing for everyone by making the currency more valuable. Also, you should not have dollars. Also, why not own Bitcoin if you're going to own something? Arthur Hayes said that Bitcoin's price is equal to its technology plus the amount of paper money that is available. In other words, it's a change in technology. It is a new idea. Satoshi Nakamoto solved the computer science problem that no one thought could be solved. This means that the technology is useful and keeps getting more valuable. People can get more use out of something the more it's used, and there are network effects, economies of scale, and other things like that. But then there's the part about cash liquidity. In this way, Bitcoin seems to follow the waves of liquidity in the larger macro environment and the central bank environment. Because of this, I believe it will always be linked to the amount of money that is available in the market, at least in the short run. David, what's funny about today is that both high and low interest rates seem to cause inflation in the United States. Everything is inflationary because the debts are too big, which is why Bitcoin kept going up no matter what. I think there will be some correlation, though. It will take some time. No way, buddy. I told them to kiss that 2% goal goodbye as soon as SVB fell apart. They'll start to talk about and accept the idea that, well, what's the difference between 2 and 3? What's 20 minus 2? It seems like that government is running for office. The government needs to make a choice. Would you like bank lines or for prices to rise quickly? Because none of your banks can pay their bills. And you'll have to let inflation run high if you want to save them, help them out, and fix the bond market. And neither is a good answer, but the government has to make a choice. And I think that in the past, governments and countries have chosen times when inflation was high. That's not going to happen. If they wanted Jamie Dimon to go to jail for running a bankrupt bank, Bank of America is technically insolvent. In 2008, they could have sent them to jail. They don't do it that way. That's why I think inflation will be high and the value of the currency will drop. In a speech he gave last month at Bitcoin Atlantis in Maldives, Jack said that Bitcoin was the hardest money ever, harder than gold and harder than all government currencies, even the US dollar. He also said that Bitcoin's 21 million cap was the stiffest money ever. There is more gold in the ground if people want it. Gold is a good way to save money. Jack told you to figure out how to go back in time to mine more. That's why we have $60,000 now. It's not possible for Wall Street to get more Bitcoin by going to the future. In a different interview with Crypto World, Strike CEO said that Bitcoin holders will never sell it because it is the hardest asset to get, the rarest asset, and the best performing asset in their portfolio. Let us go back to the talk. The idea is simple. It's the hardest to make. How hard is it to make? Would you like more of it? That's why housing is harder than dollars. It's harder to build more housing than dollars. Bitcoin, on the other hand, is the hardest money to get because it has a limited quantity. I believe Bitcoin is the most advanced form of money ever made because it is the hardest form of money and money tends to be hard. The one it finds is also the hardest to make more of, since it's the best way to value things across time and place. I think about the halving in a different way than what you might read online. I've been a Bitcoiner for 11 years and this is my third halving. I see it as a reduction in inventory, like a decrease in inventory for goods. Price-wise, I don't think the market can always price in or not price in that. I like to think of it this way: the commodity provider is the market's natural seller. That's the miner. They have an advantage over other goods. The cost of making the item is there, and to cover the costs of making it, they sell the end product. And if that's going to be cut in half, the cushion and natural sales are also cut in half. Whatever that means to me, it just means that the market has a lot less room to find new prices. If there is a new demand cycle for some reason, like interest rates going down or a new country adopting Bitcoin, price discovery will happen in a much more violent way. So I just think of it as a drop in inventory, like the '88 drought for agricultural goods. And I think that's why you see repetitive behavior after having the market has less room to take on new demand. I'm also going to split that question into two. One is that Bitcoin will always be around because the system changes based on how many miners are connected to the network. And that's one of the new things. The ability to change the level of complexity is likely Satoshi's smartest idea. It does not matter to the Bitcoin network. I believe that the mining business is one of the toughest and most competitive in the world. You are fighting with every person on Earth for energy, which is the universe's currency, at the highest level possible. So I think that's just not possible to master that field. And it's likely that they will be workers who are having a terrible time. A lot of people think it will work out.